very large implications, if not ominous implications, in the times to come. This particular legislation, which the Honorable Finance Minister has brought to raise the FDI limit from 49% to 74%, should not be seen in isolation. It's a part of a larger strategy which involves privatization of our banks, disinvesting in public sector companies, and essentially is predicated upon trying to kickstart a sluggish economy because of the wrong decisions which have been taken over the past couple of years, and along with that, try and fill the large hole in the finances of the union government, which is the size of almost 18 lakh crores today. As the Honorable Finance Minister was rightly pointing out, India's insurance sector was open to foreign capital in the year 2000, when 26% of FDI was permitted. Again in 2015, when the FDI was raised to 49%, and now, of course, the government proposes to raise it to 74%. But, Mr. Chairperson, sir, here lies the very interesting tale. And the interesting tale is that in the year 2004, when the then Finance Minister, Mr. P. Chidambaram, proposed that the FDI limit be raised from 26 to 49%, the then former Prime Minister of India, late Shri Atal Bihari Vajpayee, on the floor of this house said, "Hum virod karte hain." In the year 2008, when a bill was introduced to raise the FDI limit from 26 to 49%, and the bill was subsequently referred to a standing committee of Parliament. The standing committee was then headed by the former Finance Minister of the NDA BJP government, Mr. Yashwant Sinha. And the standing committee came back with a recommendation that the FDI limit should not be raised. In the year 2012, I recall, I was then in government, another attempt was made to raise the FDI limit from 26 to 49%, but we were not able to breach the wall which the then leader of opposition, late Sushma Swaraj, and the then leader of opposition in the Lok Sabha, Mr. Arun Jaitley, had collectively put together. But interestingly, in the year 2014, when the NDA BJP government comes into office, there is a somersault, and the FDI limit in insurance is raised from 26 to 49%, not by way of a bill, but by way of an ordinance. It was brought to the House subsequently. Mr. Chairperson, sir, the short point that I'm trying to make here is that it seems that our position on issues depends on where we currently sit or we were then sitting. So therefore, while the Finance Minister has made a very passionate plea as to why the FDI limit should be hiked from 26 to from 49% to 74%, I thought it would be worth the time of this House to recount that the same Bharatiya Janata Party, when it sat on the opposition benches, where we are currently sitting, for 10 long years opposed the FDI limit to be increased from 26 to even 49%, which they did subsequently. Mr. Chairperson, sir, the insurance sector in India today is 7.63 lakh crores, according to the Insurance Regulatory Development Authority. There are 67 insurance companies, public and private, 24 life insurance companies, 10 global reinsurance companies. LIC is the Life Insurance Corporation of India, is the only public sector company which deals with life insurance. And interestingly, it has 66% of the market share as compared to others. The conceptual question that we need to ask ourselves today is that, are we scared of foreign direct investment? And the answer to that is an emphatic no. Because in 1991, we were the original liberalizers of the Indian economy. I was listening with some amusement when the Honorable Finance Minister replied to the budget discussion, and she claimed that while they were the original liberalizers, we had actually liberalized the Indian economy under the force of circumstances. I would like to take this opportunity to tell her that ultimately nothing happens in a vacuum. Everything is contextual. And between 1989 and 1991, the manner in which the global landscape was changing, it required a reset of both India's economic and foreign policy priorities so that India could be on a high growth trajectory. And that decision of 1991 by former Prime Minister Dr. Manmohan Singh when he was Finance Minister to liberalize the Indian economy is vindicated by the fact that every successive government from 1991, and it has been 3 decades, has not diverted from that basic premise that India needs to integrate its economy with the global economy. But today, the question is not what to open up. The question today is how much to open up and which sector to open up. The reason why I want to draw this fine distinction is to unequivocally make it clear that our opposition is not to the liberalization of the Indian economy. Our opposition is to certain sectors because of the kind of strategic consequences they have for the 138 crore people, which my dear friend who's not in the House now, the Honorable Minister of State for Finance, refers to every time he replies to a question in this House. So the reason why we are opposing raising the FDI limit from 49% to 74% is because I would like to take you back to 2008. When the great economic meltdown took place, when banks and financial institutions with over 300 years of existence started tumbling like 9 pins, when even countries, entire countries like Iceland, almost went underwater, their economy completely collapsed, they barely survived a sovereign bankruptcy. India came out of that crisis unscathed, primarily because our insurance sector was still substantially nationalized, our banking sector was substantially nationalized, and we had a powerful public sector in this country. That is why we were able to survive the great onslaught of 2008, which took many nations, many institutions, and many banks down with it in 2008. So therefore, Mr. Chairperson, sir, the difficulty today is that India's economy is in a crisis. And as I pointed out at the commencement of my speech, this is not something which happened due to COVID-19. The process commenced with demonetization in 2016. It got exacerbated by the ill-conceived or the tardy implementation of the Goods and Services Act, and subsequently certain decisions which were then taken whereby rather than applying a demand-side stimulus, the finance minister decided to apply a supply-side stimulus by giving a bailout of 1,45,000 crores to the corporate sector of India, which did not result in the economy coming out of its sluggish trajectory and picking up. So therefore, the prescription, the economic prescription which this government now seems to have come to is that you privatize our public sector banks, you disinvest all those public sector companies which have been created over the past 70 years with taxpayers' money, and most importantly, Life Insurance Corporation of India, you partially disinvest it by listing the IPO on the exchange, and then you allow 76% of foreign direct investment to come into your insurance sector. So therefore, that is why I was saying that this may be a small bill, but it has very large, potentious, and ominous implications. And very respectfully, I would like to point out that, Mr. Chairperson, sir, selling the family silver is not the way to revive the economy of the family. Selling the family silver is not the way to revive the economy of the family. If the economy of this country has to be revived, correct policy prescriptions need to be applied, which unfortunately have been missing over the past couple of years when the economy of this country has been under the stewardship of the NDA BJP government. May I also remind that this is the same Indian economy which grew at an average rate of almost 7.8% of GDP per annum for 10 years continuously, despite the great economic meltdown, the Eurozone crisis of 2011, and very strong headwinds in the crude oil sector from 2008 almost till 2012. So therefore, Mr. Chairperson, sir, very respectfully, I would like to point out that since the prescription which is being applied to revive the Indian economy is a trajectory that we do not agree with, and we also do feel that liberalizing FDI limits in the insurance sector is going to go against the rights of millions and millions of small insurance holders, because ultimately, notwithstanding the safeguard which the finance minister has, I think, is contemplating or is part of the legislation, does not seem to be a part of this one, that 50% of the directors will be Indian nationals and there would be a reserve fund. Ultimately, when the reins of India's insurance companies are going to be held by foreign nationals, by large corporate behemoths, I am afraid, I am compelled to use this term, but we would be entering into a new form of neo-colonialism, and therefore, under those circumstances, I would humbly request the finance minister to reconsider the government's decision to hike foreign direct investment in the insurance sector, and we would like to unequivocally, vociferously, and completely oppose the current legislation which has been brought by the government. Thank you very much, Mr. Speaker.
Shri Jagdambika Palji.